One stock crashed 15%, while another surged 19%. Same week, same market. Here's why company selection just became everything. Markets just ripped higher. Value-aligned portfolio up 2.51%, beat the S&P 500 by 58 basis points. Here's what happened. Inflation cooled. The Fed is cutting rates on Wednesday, and earnings season has started. It's brutal. You either execute or you die. GM up 19%. Molina Healthcare down 15%. In the next 8 minutes, I'll show you what drove these moves, which themes are working, and what's coming next week that could make or break this entire rally. Because we've got the Fed, we've got Meta, Microsoft, Amazon, Apple, all reporting. This matters. Let's go. Small caps exploded, up 2.5%. That's your first signal. When the Russell 2000 leads, it means investors expect lower rates and they're taking risk. NASDAQ up 2.2%, S&P up 1.9%. Why? Friday's CPI came in cool, just 0.3% month over month. Core CPI is only 0.2%. Markets now price a 99%, not 98%, not 95%, 99% chance of a rate cut Wednesday. Lower rates mean higher valuations for growth stocks. Simple math. Future cash flows are worth more when you discount them at lower rates. And here's the thing, equal weight S&P lagged at 1.7%. That tells you mega cap tech is still driving this train. But wait until you see which individual stocks actually crushed it this week. That's next. 5 stocks. 5 massive moves, all on earnings. Halliburton up 21%, beat estimates despite revenue decline. Market didn't care about the top line, they loved the execution. Intuitive Surgical up 19%. Revenue up 23%, procedures up 19%, earnings up 30%. Robotic surgery adoption is accelerating. Las Vegas Sands up 17%. Macau's roaring back. Ford up 15%. Ford Pro division made $2 billion in profit. That's the commercial truck business, printing money. Warner Brothers Discovery up 15% on takeover interest. See the pattern? Every single one had a specific catalyst. No free rides here. But it gets better or worse, depending on what you owned. Let me show you who got destroyed. Molina Healthcare is down 15%. Missed earnings by 54%. Read that again. They reported $1.84 when analysts expected $3.97. Medical costs are spiraling. Guidance slashed. Investors ran. Newmont down 15% despite beating earnings. Why? Gold production fell 15%. Operations matter more than commodity prices. Deckers down 12%. Beat this quarter, but guided weak. Cautious consumer. Tariff concerns. Here's the lesson. You must beat and raise. That's the bar now. This isn't 2021, where everything goes up. Execution matters. Quality matters. And that brings me to sector performance, where you'll see exactly who's winning this rotation. Technology up 2.8%. Best sector. Industrials up 2.5%. Second best. Consumer staples down 0.7%. Dead last. This is a textbook risk-on rotation. Money flowing out of defense into growth. Oil up 6.6% on Russia sanctions. Gold down 3.2% as investors dump safe havens. When people sell gold to buy stocks, that's confidence. But here's what really matters, and most people miss this. The economic data behind these moves tells a bigger story. Stay with me. CPI, inflation, came in cool. That's the headline. But look deeper. Manufacturing PMI 52.2. Services PMI 55.2. Both expanding. Both beat expectations. Home sales up 1.5%. Fastest pace since February. We've got cooling inflation and economic growth. That's a soft landing. That's the Goldilocks scenario everyone's been hoping for. Fed cuts 1/4 point on Wednesday. Almost guaranteed. December cut, 94% probability. This is why stocks rallied. But there's geopolitical stuff happening that could derail this whole thing. Let me show you. Middle East ceasefire. Fragile, but it's holding. Trump is meeting Xi on Thursday. US-China tensions cooling. Both reduce uncertainty. Both help markets. Trade wars are market killers. Diplomatic talks are market makers. When geopolitics stabilize, money flows to fundamentals. And fundamentals right now? Pretty damn good. Speaking of fundamentals, let me show you what actually worked in our value-aligned portfolio. These are real positions, absolute returns. GM up 19.3% for the week. Year to date, now up 31%. Mary Barra said something brilliant. Near-term EV adoption will be lower than planned. She's being realistic, pragmatic. The market loved it. Medpace up 14.6%. Revenue up 24%. New business awards up an incredible 48%. The small and mid-cap biotech companies are spending again. Check the big beautiful bill. It rewards investment spending. Medpace is on fire. AMD up 8.5%. That OpenAI partnership for 6 gigawatts of GPUs, validation. AMD is now the #2 player in AI infrastructure. Thermo Fisher up 6%. Life sciences are stabilizing. Amazon is up 5.2% heading into earnings Thursday. These aren't luck. These are quality companies executing. But next week could change everything. And I need to show you what's coming. Wednesday, FOMC decision. Rate cut is priced in. That's not the story. The story is Powell's press conference. What does he say about future cuts? That's what moves markets. Tuesday, United Health and Visa report. Wednesday, Meta or Facebook as you all know it, Alphabet or Google and Microsoft. Thursday, Amazon and Apple. This is the biggest earnings week of the quarter. Bull case, Fed signals more cuts. Big tech crushes. GDP strong, we go higher. Bear case, Powell turns hawkish, tech disappoints. We reverse everything. Stakes are massive, and our portfolio's positioned for this. Let me wrap this up. We beat the market up 2.5% versus 1.9%. 4 themes working for us. AI infrastructure. Our semiconductor holdings are killing it. Pragmatic EV strategies. GM's realism over fantasy. Look for our videos coming soon on GM. Biotech CROs. Medpace showing exceptional growth. Rate-sensitive growth. Amazon and Microsoft are positioned perfectly. This market rewards execution, punishes excuses. We own concentrated positions in quality companies. When they execute, and they are, we outperform. Next week's loaded. Fed meeting, big tech earnings, critical economic data. We're ready. That's the week. If this was valuable, subscribe and hit notifications. I break down markets every week. No BS, just analysis and real results. Next week's Fed meeting and big tech earnings breakdown. You need to see it. Thanks for watching. See you at the next one.